Hi out there. Enzo DiCostanzo, clinical professor of economics and finance, St. Peter's University, Jersey City, New Jersey. We're coming at you tonight from Essex County again. And it's Holy Thursday into Good Friday. And we're going to get the second part of the cash chapter worked on. And we're going to do that tonight. So we're just going to pick up where we left off. So get to the spreadsheet and let's finish this off once and for all. Okay, folks, we were here last time at the comprehensive problem, and my intention is to work on that and the self-test questions. Okay, so that's what the plan is for tonight. This will be, I think, under an hour to deal with all this. Okay, so we're here. Again, I'm just going to put the answers close by, so I make sure I'm telling you everything that I it's consistent with working on this problem before. So we're here, and it says follow the 4 steps in the reconciliation procedure. Let's go to the textbook real quick, and we are at yeah, I'm working on the receivable notes myself right now, so that's why they were so close. Yeah, here's a comprehensive problem. It's PDF. And I'll tell you, folks, in class, I noticed this. You know, folks, when you go to meetings and different things, and you're working in a real job in a real place, you know, you can't surf internet and all these different things that I see you guys doing out there. You know, it's no good. You know, you have to pay attention to what you're doing. So please, you know, really try to train yourselves these last couple classes that we have. I don't even say a few weeks. I think we have about 4 classes when we return to the live sessions, because the week after Easter, I have conferences to go to. I have stuff I got to deal with. So it's probably going to be a YouTube week that particular week. But go to PDF in the textbook, page 390, and you should have downloaded this textbook to your folder, you know, long ago. You know, and like this. You know, and you go say, there's a textbook right on top. There it is. There's a text in a folder like this, not just constantly searching for the email all the time. You know, that's no good to work like that. Poor 10 company's bank statement from 2012 shows the following data. Now, again, this is the bank statement on 5/1, 5/31. There's a debit memorandum, a credit memorandum, and again, you have to keep in your mind that it's the capital account where the money goes in through the credit side and comes out on the debit side. Okay, not sufficient funds check, collection of a note receivable. Okay, so this is the cash balance per books for the bank customer's own record keeping was $13,319, and you can see the bank had several balances or bank statement numbers. There's data below. The not sufficient funds was who that customer was, identified that customer, the collection by the bank, the 3-month 12% note, and we'll go through interest. And it says no interest has been accrued, but so they computed at the end of the 3 months. That's really what that means. There's some outstanding checks, there's some deposits in transit. There's an error with a check. It says Poor 10 wrote a check for $352, cleared the bank on May 25th, but the company recorded it. Yeah, so the company recorded it as $325, so it recorded it at about $27 less than it was, so it needs to credit its cash account by $27. It says prepare a bank reconciliation statement and journalize the entries. All right, and yeah, the answers are there, but like I said, we're gonna work it ourselves here. So again, when you have this, what you need to do is, you know, really organize what you're doing. This is the May 1st statement, and you should have had a comma there. Another comma there. 12,650, 14,280. Debit memorandum, not sufficient funds check. So that'll become a receivable. So even though it was probably deducted from the account, but it's got to go back. So that's why it's a debit memorandum. And with the credit memorandum, it's a collection of the receivable that goes into the account. 175 comes out because you cleared it initially, kind of a thing. Or you deposited the check into your account, but it's got to come out because it bounced. It wasn't sufficient funds from the destination bank or the origin bank to the destination bank. Review the data. Uh, Copal was the not sufficient. Again, we'll get to that, who that is. What outstanding checks were that dollar value, the deposits in transit, that dollar value, the error here, a $27 error, where the check was for 352, but the company, your books recorded is 325. I think I mentioned this in the other video. I think I was standing in line at the bank or paying the taxes in Belleville or something, and somebody was dealing with this somewhere in my orbit of life. So it caught my eye somewhere. Okay, here's the the journal entry. Yeah, and we're gonna do the reconciliation at the end. So we'll do journal ledger and then reconciliation. So the next piece of this is you have a $500 note receivable. Okay, that's going into your account. There's interest, and the interest is equal to the pardon me. This anytime you get the dollar signs, always adjust it. 500 times 12%. Times 3/12. Okay. Oops. I missed it by a. There we go, like that. 15, yeah, $15. And there's an expense the bank charged you for collecting this collection fee, $10. So what goes into cash is the 500 plus the 15 minus 10. And again, I apologize with these little. When you copy and paste these things, the cells aren't always the size that they should be. Core collection note received by bank on behalf of 410. Okay, so we have that. That was your journal entry for collecting the note receivable. This was you're transitioning from, you initially had that $175 check. Is it 175? Yeah, the $175 check. It was deposited, but you were withdrawing it and then transitioning it to a receivable. Okay, we did that. That's couple. Again, sort of the drama is missing a bit where it's already sort of typed out for you, but you see the idea as we go through this. And then the other piece of this was the error, and it says pretend company cleared the bank, and so the company records $27 too low, so it's got to take 27 out. Yeah, because your record is 325, but it's 352. So you've got to adjust your records by 27. More has to come out, and then your payable also is reduced. Yeah, the payable. So who owes you is reduced by 27. Yeah, to correct the error of the check. Okay. This is your books. Your books say you have 13,000, not these two, but your books say you have 13,319. There it is. All right, that's cash balance for books. Okay, the note receivable, that cash number was 505 after expenses and interest, and you say equals 13,319 plus the 505. Okay. Equals what cash comes out, 175. So yeah, deduct, because the bank may have initially deposited that in your account, but the not sufficient funds, you have to basically reverse it, which is what that is. And this is just equal to your previous balance minus the 175 is usually 13,649. And then the last piece of it, that extra 27 had to come out. Okay. You didn't write your account down enough for the check that you wrote. So your book, let's get the adjusted book value. Adjusted balance in the cash account, 13,622 is what that is. Okay, so yeah, so you're going to want to see a few of those across here. So you can see it's good because we just did a problem like this yesterday. So it's good you're seeing another one because these are not easy. Okay, these are not easy at all. And you have to read the whole chapter. And I really suspect that I don't know if I say suspect, but I I'll say it like this. I wish you were really reading the chapters maybe more than you are. I'll say it in that way. Read these chapters. The semester's sort of dwindling away from us here, but you got to read these chapters. The bank statement at the end of the month was 14,280. Don't worry about you're not going to use the beginning one, but at the end it's 14,280. And actually, what I could do, put in there 14,280. No borders. Five. The note, yeah, the note was 505, but okay, but again, we went through all the steps with that. Okay, cash balance for books, and this is the balance for the bank statement. Okay. And this is 2410 outstanding checks, and this is 1752. This is deposits in transit. Okay. And this, like I said, you can do the math on that also. Like I said, you should have those sort of like that. And then actually, what I should do, I'm putting this on your notes here, but I should make mine like that also. So I'm going to do that right now. Yeah, per bank statement. So it's the 14. Yeah, that matched up. Okay. Yeah. All right. Balance per bank statement. Right there. The book number. So yeah, like I said, it's always good when you have make little adjustments in the original file without saying, "Oh, I'll remember when I go home," kind of a thing, which doesn't happen often, unfortunately. Okay. So all right. So let's do our reconciliation, and then we'll get to our self-test questions. Okay. Here you have, what do you have? You have the balance for the bank statement, 14,280, okay, which is right there. You're adding in deposits in transit. You're going to sum these. Okay, 16,032. And then you have a bunch of outstanding checks. And we don't have them itemized. We just have the number just sort of for the sake of the problem. But I don't know if that really changes your experience with the problem too much if you had them itemized. But know that you may have to itemize them in the real world. You may definitely. It never just comes as one number. And this is less. You got to be careful in class. I added those. You have 13,622. So yeah. So what's happening is cash balance for the bank, and then you're sending money inbounds. That's 1752, and then you're subtracting at 2410. Okay, so that gives you the adjusted cash balance at 13,622. Okay. Now the cash balance for the books is 13,319. You got to find it. Okay, it's 13,319. And this equals 505. It's in a couple different places. You can use 505 right there. There's no error that needed to be added or subtracted in this section. Okay, so, or added really is what it is. So equals sum Okay, so it's 13,824. 27. Yeah, so these checks, again, you can go through, and actually that's what I'm going to do, equals this, okay, and then equals that, okay. All right, 202, and these are all subtractions, or debits is what all this is. And is this a debit memorandum, I hope, up here? Uh, Credit memorandum, yeah, debit 175, yeah, that's, and the 27 is also debit memorandum. Okay, it's 202, so then this equals this minus that. Yeah, there we go. Okay, so same, 13,622. All right, we went through why and how to make all the journal entries and all that type of thing. Okay, so you have all that. Okay, the last piece. So this has only been about less than 20 minutes or so, and we're going to get to the self-test in chapter 8. And this again, we're in class. Obviously, I would be going around the room and asking this question and that question, but we don't have that. We're not going to do it like that this time through. So we'll do it like this. Okay, the Ford triangle, and again, I may have hit some of this in class already. And again, folks, forgive me, but just, I'm just, I want to make sure I'm consistent. So I just make sure I keep my little answer thing on the side here. I'm not even looking at that. Okay, just whatever. So it says, which of the following is not an element of, yeah. So now, and actually, what I have on the side here, I made some notes to go pretty, whatever, however many, whatever, 165, 100, 200 rows. And let's quickly just hit that before we deal with all the questions. There's three main factors that contribute to the fraudulent activity. They're depicted in the Ford triangle. Most important is opportunity, which means you can do it. You can commit some kind of fraud. The workplace must provide the opportunity. Take, whatever, as simple as unlocked office supplies, room with the office supplies are unlocked to, a far more complicated, the Madoff thing and all these other, complicated things that happen out in the world. That you have a financial pressure, and I think I may have mentioned in previous lectures in class, maybe even on video, that there's some banking, if you work for the Federal Reserve or the Treasury, those types of federal jobs in banks and maybe even the SEC, if you have a lot of debt or that sort of somewhat works against you because you're more susceptible to being blackmailed, and that's why the cops make what they make in Essex County, places like that, where the government is trying to dissuade them from accepting bribes from street criminals to say, hey, look the other way. If you guys remember Miami, whatever, how many years ago, probably, what is it, 40 years ago, almost, about the late 70s, you know, there was a lot of crime. Homicides were 2 a day, and the cops were making I think we did it in class. The cops were making about $15,000 a year, and if you did 2% inflation to today, that'd be about $33,000 in 2019 dollars. So certainly, either time, that's not a lot in 1979 or today. So that's why the cops make what they make of course, the dangerous nature of the job, but to not tempt them for those kinds of things. So, but financial pressure, it's a big, your personal situation, and you want to solve stuff. You want to be able to pay your bills and think about retirement and health. You don't want to spend your life struggling against that. Anyway, so you want to be very careful, very diligent, and cornering that away as soon as you can. Very important. Typo in there. Oops. Yeah, I thought I fixed that. It's because it seems from maybe in class I fixed it, but yeah. Okay. And then I deserve it, and I don't get paid enough. All those kinds of ideas. So that's the third factor that contributes to the fraudulent activity to justify the fraud, and whatever. I didn't get promoted, and I should have, and that's all just you just digging your own grave kind of thing, but by doing things like this. Internal control consists of all related methods and measures adopted within the organization, safeguard the assets, enhance reliability of the accounting records, increase efficiency of operations, ensure the compliance with the laws and regulations. If you get fined, folks, I rarely am I driving life as a private citizen. I rarely get pulled over or seatbelt, or I really try to watch that stuff because it builds up. And why am I going to just pay more taxes? Basically, is what that kind of thing is. And had the aggravation of dealing with those situations. So avoid speeding. Folks, we don't live in Montana. You got to drive a reasonable speed limit, and there's kids, a lot of, especially around St. Peter's, there's a lot of kids in schools, and there's Hudson Catholic, and I counted, there's about four or five schools that bring us, right? There's, what is it, St. Teresa's or something, and then there's a grammar school by the bank, and there's a high school on SIP, or not SIP, or yeah, I think SIP, yeah, high school on SIP, and two Catholic schools. Dickinson is a little east of us, so there's a lot of kids around. So you got to be careful with that. Yeah, laws and regulations. And again, dealing with fines is not something you want to be able to do all the time. So that saves money. So internal control environment, risk assessment, control activities, information communication, monitoring. At St. Peter's, we have, 250 surveillance cameras for security, for physical security. People not getting robbed and attacked and selling drugs on the property. All these things, right? And Rutgers has a lot of cameras in GIT. There's really, really, you're heavily photographed when you're in those environments. So yeah, and certainly banking. I know that in the Deutsche Banks and those kinds of places that there's certain floors, and unless you work in that department, you can't even walk into that department. So the day of just having the run of the place is, I think, really over. Risk assessment, competition, or are you? There's a liquor store, not a liquor store, but maybe a convenience store, and I'll say it like this, in a rather questionable area, and not a 7-Eleven, but something like a 7-Eleven, just a neighborhood convenience store. It's a chain though, and I'm not going to name the area, but I drove by it, and there's no windows. And how unusual is it for 7-Eleven, let's say, to not have windows? And actually on Broadway in Newark, and this is not as bad, on Broadway in Newark, there's a new 7-Eleven on Broadway, and it's fenced in, and that's unusual to see some of those. So, and what the fenced in does for it gives the store security a little bit more of an advantage. If they're chasing a shoplifter and the property is wide open, the shoplifter can go in any direction. But if it's fenced in, it sort of limits where he can go, and it makes it a little bit of a home field advantage for the security guys, which you need it a lot of the time. So yeah, okay. So control activities, risk assessment, information communication. I know law enforcement has plate readers now, and their communications, they can communicate with the FBI or the DEA if they're doing operations in Belleville somewhere or something like that. Monitoring. It's not just one camera on a badly slanting telephone pole. It's video, and who's keying in numbers into the bank account, accessing bank accounts, and all these other. So it's very well monitored. Okay, the whole situation, the money coming and going, the deposits and the withdrawals and the checks and all that. So like I said, you can't think that it's doing some questionable thing is going to get by. It's not. And Sarbanes-Oxley has a whole list of characteristics here, all publicly traded companies now. That's why this didn't apply. In spirit, it applies to the Madoff situation. Madoff's company was a privately held company, so this didn't directly apply, but certainly the fraud statutes apply. Maintain adequate system of internal controls. Corporate executives and boards of directors must ensure that these controls are reliable and effective. And Independent outside auditors must attest the adequacy of the internal control system. Companies that fail to comply are subject to fines, and the company officers could be imprisoned. And it's not just a free ride type of a thing. And there's a company accounting oversight board, so there's a lot of things that are added to the oversight of what's going on in business. 6 principles of internal control, and again, I confuse these often, but establishment responsibilities, segregation of duties, documentation procedures, physical controls, independent internal verification, human resource controls, who people are, background checks, and internal checks and balances, physical controls of cash, and then moving the physical currency around, those kinds of things. Locked warehouses, storage cabinets, safes, vaults, safe deposit boxes, computer facilities with pass key access or fingerprint for eyeballs, even eyeball scans, alarms, and there's a whole list of things there. This was an answer to number nine, which unfortunately is filled in, but we'll get back to this. This is not just talking about this is not going to make any sense right now. But looking at this though, there's $94 in expenses, right? And you're asking for 96. Let's see how we doing this. $100 petty cash run for it means there's 96 more is needed, but the bills were only 94, so it's cash short, right? Is what it is. Oh wait, so the bills are 94, and you're asking for 96 to cover it. So yeah, you shorted is what you did, right? That's shorting it. I just want to make sure, again, I just want to make sure that we're, short. Yeah, shorting it. I just want to make sure. So. Yeah, because the receipt's 94 and you're asking for 96, so you're asking for $2 more. So somehow, you're going $2 over what the expenses were. There should be $6 in it, but there's only $4 in there. So some kind of problem. Like I said, we'll get to that. I'm not overly concerned about that. Yeah, I always like to stop and think. Cash short, cash over type of situation. Yeah, because the bills are not, expenses are only 94, so somehow, and you're asking for 96, so you should only be asking for 94. So now $2 extra was spent, and it's not accounted for in the receipts, kind of a thing. Use of a bank contributes to good internal controls, safeguard the cash depositor in a clearinghouse for checks received and written, minimize the amount of currency the companies keep on hand, control of cash because it creates double record, and all that type of thing. Yeah, it says the following steps should be revealed. Should reveal all the recording items that cause differences between two balances, deposit, transact, assigning checks, errors, memoranda, what cash is, currency, coin, check money orders, limitations of internal control. There's a human element involved in everything. What bank statements are, checks paid and other debits to reduce the balance in the depositor's account, deposit and other credits that increase the account, and the balance after the day's transactions, and stamping checks paid. So there's a lot of I put a lot of notes here for this as we went along. So okay, we're about a half hour in, so let's hit the self-test questions, and that'll be the end of this video. And it says, which of the following is an element of the four triangle? I think we went through this already. Segregation of duties, right? That's not a part of the four triangle. It's an important definition, but it's not, it's not correct in that particular statement. Okay, let's see. Segregate. And the answers are in the book, obviously. An organization uses internal control to enhance accuracy and reliability of its accounting records and to safeguard assets, not produce correct, not deter employee dishonesty. Yeah, so it's not going to be C and D. Okay, it's not going to be those two. And preventing fraud, again, using is a grand thing, right? Everything is preventing fraud, but specifically safeguard assets. Okay, that's why you have internal control. It enhances the accuracy and reliability of the accounting records, and to safeguard the assets, which was not a result of Sarbanes-Oxley. Yeah, A obviously was not a part of Sarbanes-Oxley. Okay. Or principles of internal control do not include 4C, management responsibility. You know, morally, obviously, we want manager to be responsible, but that's not specific. We don't define that as a part of it, though. Physical controls do not include the safes, yes, locked warehouse, yes. Safe, those are all physical things. Independent bank is a documentation procedure permitting only to handle cash receipts and application principle of B, establishing responsibilities. Which of the following control activities is not relevant when a company uses a computer rather than manual accounting? When a company uses a computerized system. Yeah, I think these are all for 7. Yeah, they're all relevant. Right. So just because you go from manual to computerized doesn't mean all of a sudden you don't care about segregation of duties, those other things. Pre-numbered checks. 8 is a documentation procedure. Yeah, here's number 9, which is in here. It says a company writes a check to replenish a $100 petty cash fund. There's receipts for 94, but there's only $4 in cash. So what happened here? Short, long, whatever it may be. Yeah, you got debit. We already almost discussed this last time, a few minutes ago. Receipts are 94, but you're asking for 96, so it's $2 short, is what it is. I'm going to save this as we go. The control feature of a bank account do not include A, right? Orders aren't there to verify anything, okay? They're there to track what happened in the past. And reconciliation deposits from transit are, and actually it's right here, are added to the balance in the bank. 11C. Three more. The reconciling items in the bank reconciliation will result in the adjusting entry by the depositor is let's see, not errors, not these two are the depositor. Oh, bank service charge. Yeah, because it's down at the bottom. Yeah, that's books. Yeah, this is books down there. The reconciling item in the bank that will result in adjusting entry by the depositor. Yeah, it's great. That's because you're changing your books. Bank to do errors, and these are all up here. There's all the bank's changes. And it is not cash. C, 13. Yeah, it can't go a day past. Where if I'm showing up in November 1st, I can't write December 1st and say, we'll just hang on to it for a month because they'll not accept that because they don't want to write it as payment because it's more bookkeeping if there's something wrong. And cash is listed first in the current asset section. Okay. All right. So you had a good 40-minute or 35-minute lecture here or something like that. You had another problem worked out. So, we gave you a good hour and a half on the cash chapter. And it's funny when there's no one asking you questions how fast these chapters go. So, yeah, we'll be posting this video or send it to you by email. And then you guys can work on everything that you need to work on. So have a good Easter. I'll be making the merchandising chapter videos soon, but I want to get the cash chapter out of the way, and you have a lot of example questions to work on, and those documents that I gave you, the cash questions, the merchandising questions for the afternoon section is merchandising, the morning is cash. Okay, so there you go. Okay, you have the whole story here, and you're all set. All right, folks. So save everything as you go, and we'll get everything posted and emailed and all that. There it is, folks. Happy Easter. Read the chapter a little bit, work some problems, and we'll see you in a little bit.